Good morning and welcome. Today we have the Brazilian American Chamber of Commerce's first webinar of the year with our economic and political outlook for Brazil. I am John Welch, Executive Director of the Brazilian American Chamber, and on behalf of the Chamber, we wish you all health and safety in this difficult time. Before we begin this discussion, I hand the screen to Paulo. Thank you. Paulo?
Good morning, everyone. Thank you, John. Thank you very much. It's really a pleasure to be with all of you today. The vaccine and hopes for its quick application, however, the flaws, are the best news for Brazil at the start of 2021. COVID was the main factor explaining the economy in 2020, and its recent recrudescence is likewise the main factor shaping the economy at the start of this year. In 2020, Congress approved an emergency war budget to fight COVID. At a cost of about 8% of GDP, unlike other major economies, Brazil has limited fiscal pace. The promise of 2020 was adjustment in 2021, including a reversal in public spending and the continuation of structural reforms. IMF estimates that a reform of tax credits, namely to incompetent firms, could increase budget revenues by 2% of GDP. The real is one of the worst performing currencies in emerging markets. Despite the good news about the vaccine, the outlook is marked by uncertainty and confusion. David, the floor is yours.
Thanks a lot, Paulo. Good morning, everyone. Thanks, John, as well, and my colleagues here in the panel. Although we all know that Brazil is a relatively closed economy, we are expecting a big increase in global GDP. So that's the case on a global basis. That's not the case for Latin America, and that's not the case for Brazil, right? The region is still underperforming, and Brazil, we are expecting a decline of close to 4%, between 4 and 4.5% last year, and growth around 3% this year. We are expecting, for example, a big jump in growth in China. Growth should move from 2.3% last year towards 8.5% this year. So this is going to help to sustain commodity prices. When we look at the balance of payments, we saw a big improvement in the current account last year for the wrong reasons, right? It was a cyclical improvement. It was pretty much because I couldn't travel to the US to buy stuff. So neither me, neither other Brazilians, and also the collapse in imports. But for this year, if growth starts normalizing, we should see some deterioration in the current account. One of the key surprises last year was the decline in FDI, because historically speaking, we normally see the FDI relatively resilient in Brazil, pretty much because we see an increase in intercompany loans. And when COVID shock hit Brazil, we saw outflows in portfolio as well. Our expectation for this year is that FDI starts to come back together with this pickup in the global economy, and that depending on what Brazil does on the fiscal side, we could see some portfolio inflows. So on fiscal, I think the bottom line here is that we need to respect the cap. And if that doesn't happen, we will most likely be discussing a different level for asset prices. We saw a shock in commodity prices. We saw a shock with the currency depreciation. And this led to a big jump in consumer and broad inflation. So I think we should focus on two things on the inflation front. First, broad inflation is still under pressure, and this could translate into higher risk for consumer inflation down the road. And second is the disconnect between what's going to happen with monthly consumer inflation and what's going to happen with year-over-year consumer inflation. So monthly consumer inflation is already slowing down because, for example, we are seeing deflation in housing prices due to the decline in electricity prices. But in our forecast, year-over-year inflation is going to go beyond 6%. With that in mind, we think that the central bank should start normalizing interest rates. And most of the reforms that we are discussing right now, they were already in the table before COVID. And given the massive fiscal deterioration that we saw, right now we need to discuss things beyond what was our our initial plan as a country.
Good morning, everyone. It's a pleasure, as always, to join you, and Happy New Year. Actually, I would like to say this maybe once. Brazil's growth did not disappoint last year, which was unlike the last 3 years. We always expected more, and then we were disappointed in growth performance. Last year, because of the very large and forceful fiscal measures that were taken, growth will come in. We expect around 5% contraction. We expect that to grow to around 92-93% this year. So that's a very high level for an emerging market. It's between 2019 and 2021. This year, there will be some 20 percentage point jump in debt. A note on the growth forecast. It's even at 3%, it's now above trend, right? The trend growth for Brazil, or the steady state growth for Brazil, anyone estimates between, on the optimistic side, around 2.5%, more likely around 2%, more likely a little less than 2%, without resuming a sustainable path of higher growth. And that requires probably structural reforms. It will not just come back on its own. Then that dynamics will be also challenging. And we now are talking about the fiscal consolidation from a debt level that is above 90% compared to a debt level that we were talking about 76 in 2019. And we were still discussing the need for fiscal consolidation. I would say 2021 is kind of a high stakes game for reforms. You rightly pointed out that the fiscal stimulus that was put in place, or support, it's not really stimulus, was necessary, was needed. It did contribute to supporting the lower income households in the middle of the crisis. People lost their jobs. It supported the consumption. It allowed in a way, prevented a significant drop or a significant increase in poverty and income inequality. This is all, worthwhile, and we recognize that. Having said that, that is all assumes also a return to fiscal consolidation and a resumption of a path of stabilizing debt burden in the first instance, and then beginning to reduce it. If we look at Brazil's ability to cut spending, and we say, oh, there's only 7% of spending that is discretionary, there's very little to cut, and you're really kind of coming to very close to the bone, as it were, where do we go from here? But the truth is, if you look at the rest of the spending, which is mandatory, if you look at the application of the PEC, also the fund estimates that this will save around 3.5% of GDP. That's a substantial fiscal consolidation here. The last few years, we have seen, of course, a dramatic drop in interest rates, right? And David pointed that out. And this, of course, was a key factor in improving debt dynamics, meaning we saw the government interest bill and a measure that we look at closely, interest to revenue, drop significantly. So even though we do expect interest rates to normalize, and David mentioned the inflation outlook, so that is normal. The degree of rise in interest rate and the risk from rapid hikes or sudden hikes, that will be driven by rising risk premia or more elevated uncertainty about the fiscal path. So the risks still come from the fiscal side in that sense, would really undermine or reverse a virtuous cycle on the dynamics that we saw. And I wanted to remind everyone, we still have a stable outlook on Brazil's debt. We kept our BA2 with a stable outlook last year. And partly because we saw that debt dynamics improved. So even at a higher level of debt service was coming down, and that improves debt affordability.
Let me begin, Paulo, and my colleagues, by talking about where we're standing right now. We are only 4 or 5 days before the House of Representatives and the Senate elections. Our backstage information suggests that in the House, Congressman Arthur Lira will in fact win the House speakership on Monday. It is true that Lira will be more open to negotiating with President Bolsonaro, and that is mainly because he is not a very ideological person, unlikely what we have seen in the last 5 years with Rodrigo Maia. The Centrão likes to operate in what we sometimes describe as the perfect storm, a scenario in which Bolsonaro, regardless of the president actually, but Bolsonaro in this case, is very fragile. And it's also worth pointing out that in 2020, the Centrão had a very good performance in the local elections, despite not being formally backed by Bolsonaro, which means they have become more free to oppose or counter the administration if they want to, because they know that from an electoral point of view, the outcomes will not necessarily be too negative, considering the next general elections in 2022. There have been talks of investigating at least the health minister, General Pazuello, who is also being investigated by the public prosecutor's office as well, and by the federal police. And some people, some lawmakers want to extend that investigation from a political point of view to the president as well. The more you extend emergency aid, the more likely your approval ratings are likely to go up. Last year, we covered every single meeting and public hearing of the Joint Committee in Congress that is in charge of drafting the final version of the tax reform. And based on what we saw and based on what we heard, honestly, we don't see a structural reform as a likely scenario. There's a possibility that the second half of 2021 will be more positive, especially if the administration gets the vaccine rollout right and straight.
Great to be back here, Paulo. I think it's been almost 10 years since my last time with you. And it's interesting when you look back in that period, it's been challenged for Brazil. We had some progress in some areas. As mentioned here, inflation has come off, interest rates converged to developed markets. External accounts have been a second thought, I would say, pretty balanced, no major macro imbalance there. But it's been another lost decade for Brazil when you think in terms of GDP growth. The average growth for Brazil over the past 10 years being 0.2%. I do think that Brazilian assets can perform pretty well in the first half of the year, at least. David mentioned en passant the global backdrop. I think this is key. We have a situation where nominal rates are at zero, real interest rates at negative levels. We have massive fiscal stimulus. And here, I think it's very important to keep in mind that this fiscal stimulus in developed markets, there is a big debate on how it's going to be funded. And for the first time, I believe we're going to have a balanced policy mix between monetary and fiscal that both will be pedal to the metal. Brazil needs to stop the unforced errors. Brazil may finally do the right thing on vaccination after trying all the wrong alternatives. Another important thing is that when the central bank changed its stance on monetary policy, it also sends a message on potential intervention. I mean, we've seen intervention. So it seems to me that we can see more intervention if the market second guess the ability or the willingness of the central bank to put a lead on any potential anchoring of inflation expectations. When you try to model the real against some more top-down factors, credit spreads and commodity prices, Brazil is trading with a premium between 1 to 2 standard deviations there. So I think there is, the currency is pretty ripe here for a correction. And in terms of levels, what we have in mind is we would expect the range to change from the current 520, 550 to something between 490, 520 in the first half of this year.
One of the key drivers for this BRL weakness was this this combination of very, very low interest rates, and Brazil was a country that was funded by carry trades. That was the Brazil story that we know it, and out of a sudden we go to 2% interest rates. Imagine, this has a huge impact on the type of flows that we used to have. If we are not able to respect the cap and approve reforms, then we would be discussing a change in the price level, we could be talking about a currency above 6. The cap is stretched. We think it's feasible for this year, but for next year, it's going to be very, very complicated to meet the cap. In our calculations, we are talking about close to 30 billion deviation from the cap, 30 billion reais.
The fiscal side showed progress. The social security reform was a big step. The spending ceiling anchoring expectation, even though everyone had doubts, how are you going to maintain it in 2 or 3 years? But yes, by making reforms to make it sustainable, and then when you improve the underlying fiscal framework, then you can maybe say, okay, it's not the ceiling, now the underlying framework has improved. So we have confidence that fiscal policy will assure, if you will, fiscal sustainability. So that you don't need a straitjacket because the underlying framework is now works better. But we have not done that yet, or we have not seen this happen yet. So that's why the ceiling remains the focus of everyone. Brazil's main problem is the rigidity of spending. You cannot cut spending and you cannot reallocate it. I mean, in other countries, you can, okay, I don't want to cut, but at least I can take from here and put there so that I meet the needs in a crisis. Then I did this. There's no flexibility like that in Brazil.
One dimension is the likelihood for reform approval. The second dimension is whether the reforms that are going to be passed are sufficient to tackle the fiscal problem. As I said earlier, I think there's political space for reform discussion, especially a public management reform, not so much a tax reform. In fact, Congressman Arthur Lira, who, as I said, is very likely to take the speakership next Monday, has already stated that he is in favor of discussing first the reform, the public management reform, to only then, if there's any time left, discuss what there might be a tax reform. And the second dimension, just to wrap up, is whether the quality of the public management reform is sufficient. And as I said, the amendment to the Constitution 32, which was proposed by the administration last year, is an amendment to the Constitution made of principles, meaning that once they pass the amendment and once the amendment is enacted, Congress will still need to regulate the amendment, and that takes time. We're talking about 3 to 4 bills that will need to be sponsored either by the government or by by Congress itself. And I don't think there's time to address those 3 to 4 regulatory bills until 2022, especially in 2022 when we will have elections coming up.
Thiago, that's a question for you. How is the relationship between Paulo Guedes and Bolsonaro? Does Bolsonaro really have an alternative to his post-Ipiranga? And what happens between the relationship of Paulo Guedes with the new Speaker of the House, since we know that he had pretty good access to Rodrigo Maia?
There's this problem in the administration, 2 problems actually. One problem is the difficulty of the economic team to address its challenges and to negotiate with Congress. The problem when we have, any administration, an administration that is elected without a social base, made up, whose stakeholders are made up of people who have not been in politics, is that they have difficulties negotiating with the political establishment. So Guedes had a big ministry, as a big machine, as we call it here, and we feel that not only him but also his advisors have failed to properly understand how to manage the public administration, and also have failed to understand how to negotiate with Congress. The second problem, which is a problem that has been posed by Bolsonaro himself, is strengthening a group of people within the administration that oppose Paulo Guedes' economic view. And there are some ministers, both from the infrastructure side, but also within the palace, that are against what Paulo Guedes sees as the proper and needed economic stance that the administration needs to to adopt. We are in a very different scenario compared to, for example, when Dilma was impeached. Maybe the economy wasn't as bad as it is today, but the prospects for the economy back then were much worse than they are today. And that plays a huge difference when we talk about impeachment. So that's why we don't see impeachment today as a likely scenario. It's not impossible, but it's not a very likely scenario.
I would like to thank our panelists again. I thought this was really an excellent discussion.
And thank you all for coming, especially to our members. For those that are not members, please watch the brief video that follows. And even if you are, it might be interesting to you. Until then, stay healthy and in good spirits.